Shifting focus to the broader African market, Kenya has tabled its 2025-26 national budget almost a year post the major protests against tax hikes. Under this new budget, individual taxes have not been hiked, but plans are in place to widen the tax base. The budget deficit, in the meantime, is projected at 4.8% of GDP, down from 5.7% previously, while the economy is expected to grow at 5.3% this year and in 2026. But the country's debt-to-GDP ratio is still way above 55%, far outpacing what is considered to be the considerable threshold. Is this a realistic budget? Shani Smit-Lengton, economist at Oxford Economics Africa, joins us with her analysis. Thank you so much for your time, Shani. Before we get into the details of the budget, just firstly talk to me about Kenya's economic backdrop that this budget needs to cater to.
Thank you so much for having me. So the government currently forecasts quite a robust economic growth rate, but we believe that the economy is operating at a much weaker rate. Last month, the country's PMI fell below the 50-point threshold, indicating a deterioration in business conditions. And business sentiment has remained weak over the past year. Businesses have cited high operational costs as well as weak consumer demand as the two leading causes for this. So yes, I think a lot of other African nations would envy Kenya's economic growth rates at the moment, but I do think that the economy is performing at a lesser extent than it can.
Yeah.
Other than that, the government has had to sort of balance securing a new IMF program with potential threats of protests. So I think there's a lot going on in Kenya at the moment, which the government has just had to balance.
Yeah. Well, just, you talk about lower consumer demand, and of course, then it makes sense while there have been no personal tax hikes. Talk to me about those tax dynamics, but also how government then plans to kind of boost its revenue.
So the government would like to increase its revenue by two different streams. The one is by implementing tax reforms, so improving its tax administration. And then the other one is to make some tax adjustments. So I personally feel that the sort of improvement to tax administration is long overdue. So this is definitely a step in the right direction. In terms of the tax adjustments, I almost feel like this was a backdoor strategy from the government because, as I mentioned earlier, businesses are already facing high operational costs. So even if it's just a tax rate moving from zero rated to exempt, means that businesses are losing out. And because businesses have limited capacity to absorb this, they're just going to pass it on to consumers.
Yeah.
So yes, these fiscal measures are very credible, but I think at the end of the day, businesses and consumers are still going to suffer.
You talk about securing this new IMF program that maybe could trigger protests. Just talk to me then about where the government stands and its appetite and need for external financing at this point.
Yes, so the government still relies on external partners in order to meet its fiscal needs. The government is currently negotiating a new IMF program, but talks are still ongoing. As far as I know, that they are meeting in September. So hopefully we see more action surrounding that. But just in terms of its current budget, IMF funding has not been included, which makes sense because they haven't yet secured an IMF program. But the government has indicated that it's reached out to the World Bank and the African Development Bank in order to secure funding for its financial needs.
And that also now brings into question the trajectory of debt. I did mention in my introduction earlier on that the debt to GDP ratio is still quite elevated. How then should they be approaching this? And is there a plan to try and bring that down within the current circumstances?
So the government highlighted that it does acknowledge its heavy debt burden. Public debt currently stands at 66% of GDP, which is quite elevated. In order to reduce the pressure, the government has indicated that it wants to achieve greater fiscal consolidation and that it will continue to lean on concessional borrowing from institutions like the IMF.
Yeah.
In the government's budget, they also indicated that they would like to explore new innovative funding sources. So they would like to look at debt swaps, as well as diaspora bonds, as well as debt sustainability bonds, just to diversify the way it raises funds.
Yeah.
So the government is very well aware of its debt situation, and I think is getting quite creative in the different channels to try just reduce its debt burden.
And there's also quite a significant, a forecast of quite a significant reduction in that deficit. How ambitious is that considering the current macroeconomic headwinds?
So I think it is quite ambitious. I think the government's fiscal measures are credible. I have to give it to them.
Okay.
But I don't think they're going to achieve the fiscal deficit that they have envisioned.
Yeah.
So the government anticipates a fiscal deficit of 4.8% in the new financial year, whereas we believe that they're looking more towards a fiscal deficit of 5.8%.
Yeah.
So a narrowing, but still much more worse than what the government has.
Yeah. Well, let's get on to spending here. Just highlight for me some of those spending targets and goals, and if it's catered to everyone, or are there certain groups of the population that will be benefiting more than others?
So I suppose they're winners and losers in terms of the spending plans. I'll start with the winners. The winners is national defense, security, education, and county governments. But interestingly, agriculture took a hit, and so did development spending. I think it's quite concerning that agriculture took a knock because it's a very important sector for food security and job creation, which is basically what the government aims to achieve through this budget.
Yeah.
In terms of the development spending, this doesn't really come as a surprise, as this is usually the channel that most governments take when they're under financial pressure. They tend to cut development spending. But what is good to see from the Kenyan government is that they have reached out to the private sector to try fill this gap. So they've reached out to the private sector to make sure that investment continues to flow into its development projects. And they've highlighted energy, transport, and water as key areas that they would like to engage the private sector with.
Yeah. And just lastly, as we close off this conversation, I mean, you've said that it is a credible budget, maybe some targets a little bit ambitious. But I mean, just talking about the important sectors that will be the losers here, agriculture, development spending, and you also talk about the tax adjustments that kind of seem quite indirect and backdoor. Could then we see backlash coming from some sectors of the population at this point?
So at this point, we do not anticipate backlash like we saw last year, but there has already been some unrest.
Okay.
We're continuing to monitor the situation, and I think the way the government sort of like targeted its tax adjustments, businesses won't necessarily push up their costs immediately. So we'll see an increase in consumer prices like over time and quite unevenly. So if there were to be protests, I just think the government was very almost sneaky in its approach. So for now, we don't anticipate protests, but the situation can change in, say, the next 6 months.
Well, thank you so much for your time and for your insights there, Shani. Really appreciate it. That was the economist at Oxford Economics Africa, Shani Smit-Lengton.